Howdy, Jacob here. Today we're looking at Novo Nordisk, pharmaceuticals industry. They are in the healthcare company. They are a healthcare company that engages in research, development, manufacture, and market pharmaceutical products worldwide. Diabetes and obesity care segment provides products in the areas of insulin, GLP-1s. Wow, no surprise. Founded in 1923, headquartered in Denmark. Okay, growth in the last 2 years has been astronomical. Prior to that, there was a good amount of growth, but nothing as substantial as recently. Return on invested capital has historically been absolutely crazy, well over 50%, which is unheard of. That could be inflated due to share repurchases, though, so keep that in mind. Earnings per share and operating profit have increased more than the revenue has increased, so that's positive. Gross margin up, operating margin up, very positive directions there. Balance sheet shows 4.4 billion in short-term investments and cash equivalents, with just 2.3 billion, about 3.1 billion in short-term and long-term debt. So that's a very safe balance sheet, no concern there. Cash flow shows a good amount of reinvestment, which we can see from capital expenditures increasing from 660 million to 3.8 billion, and their cash from operations have tripled over the last 9 years, so that's very impressive. Use of cash flow seems to be maybe 10% or so, maybe a little less on acquisition, a bit of reinvestment in both uh, tangible and intangibles, a lot of share repurchases, which is what I said again at the early part of this video. Return on invested capital can be inflated due to share repurchases not really being expanded on their balance sheet, and that's what it's based off of. And then their dividend currently pays out maybe 50% or so of the 5-year average free cash flow. So not a big concern there. I think we're ready to start making some assumptions that based on that 47p and already relatively high earnings margin and such, I feel like I'm not going to be with the growth ahead of them. I just don't know how sexy it's going to look, but let's do it anyways. So growth rate, let's assume maybe 8%. Nah, it seems a bit excessive. Let's do 6%. Let's do 18p in price to free cash flow based on the fact that they likely do have a good moat for them. I'm sure their trademarks and such don't end for a bit. They're in the GLP-1s, which is exploding like crazy, and I don't see that slowing down. As for margins, 33.5, 34.5. Let's do 34 and 35% with 1% share change buybacks. From buybacks, dividends, let's grow that with revenue. Let's keep a little bit of money on the side so that the company can reinvest at good rate, make acquisitions that make sense to them, and we get to a price that just looks a bit expensive right here. So quicker video, but I like most of these videos in the screener. Great company. I just want to buy it at the right price. So thank you and have a great rest of your day.